Now, to discuss how the MPC decision will impact your car installments, I'm joined by Mr. Lebo Gaoaketse, the Head of Communications at WesBank. Good to have you with us this afternoon, sir. Perhaps let's start with how consumers have dealt with the impact of lower interest rates when it comes to their car installments. Have they been paying the previous amount that they were initially paying, or did you find them topping up and paying more than the minimum requirement?
Thanks for having me, Thami, and good afternoon to the viewers as well. We find that, most customers are maintaining their old installments, obviously to help them service the debt, because as the, interest rates decrease, it is a bit of relief to most of our pockets, which means that our installments go down. So our customers are taking this opportunity to service that debt and maintain the same installment, which means that they will finish paying off their vehicles much quicker. So it's a bonus.
So do lower interest rates actually translate to a savings for consumers and specifically for motorists in this particular instance?
Absolutely. It really relieves pressure from the monthly installments, because as the interest rates go down, the monthly installments also go down. But quite important to note, Thami, and this is what I always caution against, is that there's more to owning a vehicle than just an installment. As we know that petrol is also a cost, and the petrol price has gone up recently. One needs to be mindful of petrol costs, of insurance, for instance, is another cost, as well as your maintenance and service costs. So yes, the installment goes down, but very much be mindful of the rest of the other costs.
And talking about... go ahead.
Yes.
I think you were still about...
rightly speaking, it's welcome that the installment goes down, but be very mindful of the rest of the other costs.
So what type of advice then, would you give to motorists? Should they use lower interest rates as an opportunity to try and pay their cars off sooner?
It really depends on what the priorities are. That's first prize to service debt, because now it's really the perfect time to make sure that you pay off that car as soon as you possibly can. You can also save the difference, as we spoke earlier on, that there is a saving. If you put the difference in an interest-bearing account for the same term as the loan, you will realize a good saving at the end of the term. I would definitely advise them to keep the amount to pay so that they pay them quickly. It is also a great time to service a new vehicle, getting a new car, because the interest rates are the lowest we've seen in a long time.
And talking about new vehicles and acquiring a new car, talk us through some of the specific price points. For a quote-unquote entry-level vehicle, what can a consumer expect to spend on that?
An entry-level vehicle costs anything between 280 to about 320,000, and you really, for a basic installment, and I would not want to be quoted on this because it varies. It varies on the deposit that the customer pays and all the other added costs. What I'd recommend that our consumers do, or people who are interested in buying a vehicle, they can, check the affordability on our WesBank app, where there's a whole lot of ranges of cars that they can choose, and it will give them the approximate installment that they can pay. It is really an opportune time, as I say, to get those new wheels if you're in the market.
You did mention, of course, that you don't want to be quoted on this, but for a general case scenario, for somebody who does not have a deposit to put down, what would be the repayments of that entry-level car, which you say would cost between 280,000 and 320,000 without a deposit?
Correct. That's the amount that you're looking at. And the installment would be, between, let's say, 2.5 at 2.5 and 2.8. At this present moment, as I do say expressly, I do not want to be quoted on those amounts because scenarios vary. but that's what you're looking at. And over the past year, what we've also seen, which is quite a bonus, is that, people are trading down and getting into those entry-level vehicles because the usage for vehicles has obviously gone down with us being in lockdown for a lengthened period of time.
We're talking here about new cars. What about pre-owned cars, used cars? Do the interest rates affect prices in that category of vehicles?
Absolutely. Remember, any car is financed, and we are seeing a trend where people are actually moving towards used cars. They're preferring used cars, good, decent used cars are being financed. And the minute that the interest rate goes down, it makes those affordable as well. We've got our inspector car, used car arm, which helps with that part of a vehicle owning process in terms of new or rather used cars, if I can put it that way. So the trend is definitely shifting to used cars, and again, a perfect time to get into a set of wheels for used cars.
And for how long do you anticipate us enjoying these record low interest rates?
Well, the economists are saying that we are going to be, with the MPC announcing the rate this afternoon, the economists are saying that it's going to be stable for quite a while, possibly till mid-2022. That's what they're saying, to obviously stimulate the economy further and really give consumers a breath in as far as spending is concerned. So we are going to be in this fortunate position, if I can put it that way, because we are hoping that people will finance more cars. We're going to be in this fortunate position at least till June 2022, Thami.
This might be a little bit of an arbitrary question, but earlier on in our conversation, you spoke about all the various costs that are associated with owning a car, that it's not just the repayment of the installment, but there's obviously the petrol costs, there's the maintenance, and the service costs. Are there any ways that one could perhaps end up paying less for maintenance and service costs? Any tips perhaps that you can give to motorists on maybe various packages that they can make use of?
Again, I always say shop around, but now with us using our cars less, Thami, one can definitely negotiate on any maintenance and service plan, because remember, a service plan is based on kilometers ordinarily, and they would quote you on what is anticipated to be your travel or your mileage after a certain period of time. So with us traveling less, I would urge consumers to definitely negotiate those rates down when getting those service and maintenance plans. Again, a car that travels less is maintained less. And if most consumers have experienced as well, is that our insurances are negotiating sort of lower rates because we are again traveling less. So all in all, despite the fact that the cost of a vehicle goes down, all the other related costs should go down except for petrol, which is not controlled or which can't be negotiated down. So speak to them, negotiate down, shop around, and be very mindful of what you can afford as a consumer. Now is not the right time to over-indebted yourself unnecessarily. Perfect time to manage that debt, save that money, as I said earlier on.
Well, thank you very much for such sage advice as we take a look at how you can best maximize the lower interest rates if you are a car owner. That's Mr. Lebo Gaoaketse, Head of Communication there at WesBank.